Herzlich willkommen zu einer neuen und spannenden Folge Marc spricht mit Michael Saylor. Michael Saylor ist der Gründer und Vorstandsvorsitzende von Microstrategy. Und Microstrategy hat im August diesen Jahres für Aufsehen gesorgt, als man nämlich verkündete, einen Großteil seiner 500 Millionen Dollar Cash-Reserve in Bitcoin zu investieren. Ja, ihr hört richtig. Microstrategy hat für 425 Millionen Dollar Bitcoin gekauft. Als Schutz vor Inflation, gegen Entwertung, als Schutz vor Minuszinsen und gegen den Wahnsinn der Notenbanken. Es ist für mich wirklich eine große Ehre, dass wir Michael für dieses Gespräch gewinnen konnten. Es ist eine Premiere. Er tritt erstmalig auf dem deutschsprachigen Kanal auf und erklärt uns, wie er zu dem Entschluss kam, wo er den Bitcoin-Preis sieht, was er von anderen Kryptowährungen hält, ob er Gold oder Bitcoin besser findet und wie die Wirtschaft momentan dasteht. Freut euch auf das informative Gespräch. Ich freue mich über euer Feedback, über euer Kommentar natürlich. Ich freue mich über ein Abo und über euren Daumen nach oben. Teilt das Video gerne mit Freunden, Bekannten, auch Skeptikern von Bitcoin. Wir haben auch unglaublich viele Anfragen bekommen, wo man denn sicher und seriös Bitcoin kaufen kann. Ihr könnt gerne unten in den Shownotes schauen, dort haben wir euch seriöse Quellen verlinkt. Und bleibt gesund, bleibt tapfer und denkt daran, wegen Bitcoin und wegen Menschen wie Michael Saylor, die wirklich eine neue Epoche begonnen haben, ist die Welt da draußen besser, als wir immer glauben. Herzlichst, euer Marc. Hi Michael, how are you today?
Happy to be here. Thanks for having me.
This
is my first German podcast.
Oh, amazing. Do you speak any German?
Ich spreche ein bisschen Deutsch.
Oh, marvelous. Wow! Where did you learn that?
One semester of German in college.
All right. I see. The next interview we do in German, okay?
Okay, I have something to look forward to.
Yeah, no, just kidding. But it's an honor to have you here. It's the first time for the German audience, and they're all eager seeing this interview. I tweeted actually that I invited you and that we will speak together, and my Twitter account just exploded. It was amazing. The people have a million questions about you, but everybody expects us to talk about Bitcoin, MicroStrategy, sound money, central banks, inflation, gold. But let me start with something else. Let me start with Argentina, because there is something we have both in common, because I used to live in Argentina during 2001 when the sovereign default happened, and I lost a lot of money. The same happened to you, I heard.
Yeah. I mean, the only place I ever lost money from a currency collapse was Argentina. And I had, I have a company, subsidiary in Argentina. MicroStrategy is the largest business intelligence company in Argentina.
Wow.
And it was a good business for us. And we had earned a lot of profits, but we got caught up in this capital control issue. So first of all, we had profits and we couldn't take them out of the country.
Yeah.
So then we decided, well, we'll store them in dollars. So we converted our pesos to dollars. And then it was back when the peso was 1-to-1. Argentine peso, $1, 1 peso equal $1. I thought it was pegged.
Yeah.
So I learned the hard way about pegs. I was never a trusting person. So I thought, okay, well, it's 1-to-1, but we'll go ahead and convert it to dollars. So then the next thing I do is I said, well, can we put it into an American bank? So we put it in the Bank of America in Argentina in dollars. And then I kept reading all these headlines and I said to the lawyers and the finance people, can we get the money out of Argentina? Like, nope, can't move the money out of Argentina. So then we waited and it was kind of a thing of wonder. I thought, first, the Argentine politicians passed a law forcing you to convert your dollars into pesos.
Exactly.
Then they devalued the peso
74%.
And we lost 90% of our money overnight.
90. Oh my
90.
God.
Yeah,
Okay.
so we had $1 million and it went to $100,000 and there was nothing you could do about it. And we were able to survive because we're a multinational. It was irritating to have all your money stolen by the government, right?
Yeah.
Irritating. But they have a lot of power. You have no power. So,
but you see how fast it can happen. And I used to live there. I used to work in Buenos Aires, and it was at the end, the politicians, they came in front of the camera on the TV channels, and they promised everything is okay. Don't worry about the money. Don't go to the bank. Don't start a bank run, please. I trusted them. I was young and naive. And then Monday morning, I woke up, and I was going to work, and then I waited for my colleagues, Argentinian colleagues. They didn't show up. And then they called me and said, "Hey, Marc, what are you doing? Where are you?" And I said, "Hey, I'm in the office, of course. What's going on? Hey, and the currency failed. It's a sovereign default. Get your money out of the bank." So I tried it, and it was not going to happen because the banks were all closed. There were big queues, and in the end, the valuation, the peso just devalued 74%. So it was horrible for the people till today. Actually, they never recovered. I have a lot of friends down there in their 40s. They're still living with mom and dad, and they had no chance to recover. And it was just like a shock for me. Since then, since 2001, I started to deep dive into the monetary system in sound money, because I said, this will never happen to me again. I will never lose money again, because I lost a lot of money, private, but also the company I worked for, of course, which was a German company with a subsidiary in Buenos Aires. But it happened in 4 hours. In the morning at 8 o'clock, you could buy at a bakery a croissant for 1 peso. At 10 o'clock, it was devalued by 50%. At 12 o'clock, nobody accepted the paper money. You could have like thousands of pesos. Nobody did care about the money. They said, give me something real, give me dollar or give me gold.
Well, Marc, it happened to me twice.
Twice? Oh, okay.
Not just once. Because every 10 years they have this problem. And I've been doing business in Argentina for about 20 years. So the first time they converted our dollars to pesos, devalued at 90%. We lost 90% of our money. But we had a company and customers and employees in Argentina, and we were selling software. So we just kept doing business because it was the most rational thing to do, even though I felt like the government stole all our money. But 10 years go by, and they reset the currency and they start the entire thing again. Yeah. And so we have all our money in Argentina, and we've got like $1.5 million, and we built it up, and we try to take it out, but there are all these rules about when you could take it out. So I met with, and this is not my first rodeo. So I met with all my lawyers and my finance people, and I'm very sensitive to this. They're all like, this is just a small part of the business. It's not a big deal. I said, this is a big deal. They're going to do it again. It's going to crash. And I said, we have to get our money out of Argentina. Yeah. I said, can we repatriate it? I said, no, we can't. I said, okay, can you guys go and buy a bunch of gold and carry the gold? And they go, no, that's illegal. We can't do that. So then I said, well, can we buy a ranch or farm, or can we buy anything tangible? Like, no, we can't do that. So I look at them, and I said, can you buy a yacht and sail it from Argentina to the Caribbean, and we'll take delivery of the yacht? And they looked at me and they're like, and they got very quiet because because I'm an intimidating person. They didn't want to tell me I'm out of my mind, and they thought I was crazy. But Marc, I wasn't crazy. I was serious. I was like, I see this is before Bitcoin, by the way. Yeah. Before Bitcoin, your choices are you buy gold or you buy a yacht or a boat, and you put, well, you buy I was like, buy a boat and put something in it, a cargo, oil, sugar, steak, whatever, anything, and float it somewhere else. That's why it's a boat. They're just thinking that this, somehow they didn't get taught this in business school or finance school. And finally, I didn't know about Bitcoin. I probably would have said buy Bitcoin if I'd known then. I don't know how that would have worked out either. But the ultimate solution was, we ended up basically having to buy some complicated sovereign debt that was issued by the government. Mm-hmm. So the government is the gatekeeper. And if you want to get your money, you can get your money out. You have to pay we paid a 25% haircut. It's like a 25% commission by the time we got our money out. And by the way, I thought, okay, I was grateful. I was like, okay, I only lost 25% of my money to keep the rest.
They're criminals.
Later on when I discovered Bitcoin, I mean, when I really got it, and it was only this year that I really got it, I just realized how this is really it's a lifeboat for anybody, that if you had any degree of wealth in a country where the currency is collapsing, it's like a life or death thing. It's like I had the ability to pay 25% commission to move my money, but what do you do if you're an Argentine rancher or a business person or a family, and you can't do that? And so it really is a heartfelt issue, and it makes you very passionate about Bitcoin and the need for Bitcoin to be successful, because you start with the observation there's 1 billion people in countries with collapsing currencies, and without it, they're going to drown. They're literally going to financially drown. And then it doesn't take much longer to realize there's another 1 billion people in pseudo-collapsing currencies. And then you realize the other 5.5 billion people are in countries where the currency is losing 10 to 15% of its value every year. They're just slowly freezing to death. And this is an idea that's time has come, and the people of the world, all 7.5 billion of them, need this.
Exactly. It's the biggest chance mankind had in the last century, I would say. But let's step back a little bit. What did change your mind? Because in 2012, you twittered that Bitcoin will fail, it will die, it's senseless, don't invest in Bitcoin, it's a bubble. So what happened? What piqued your interest in Bitcoin in 2020?
I think that when you're faced with a financial crisis that you interpret as a financial crisis, that is, it has to impact half of your net worth. If it's going to impact, if you're going to lose all your money, or if you're going to lose 90% of your net worth, then your mind opens, because that's a true crisis. When it's a crisis that impacts 1% of your net worth or 2%, it's a nuisance. So back in 2010, I knew about the problem of capital controls and weak currencies, but it was a nuisance because 98% of my business was somewhere else. And as a personal investor, I mean, corporately, it wasn't threatening to the corporation. And personally, I was an investor in Apple, Amazon, Facebook, and Google. And if you go back and look at the stock chart of Amazon, Apple, Facebook, and Google, for 10 years, you'll find they went up by a factor of 10 to 20. So if you actually invested your money and you were going to get 10x your return, and I went from $50 million investing in these things to $500 million, and I was just sitting and riding the mobile wave.
Oh yeah,
doing nothing. Right? Google, I wrote the book, The Mobile Wave, in 2012. I published it, and 50,000 people read it. Most people didn't pay attention to it. And I didn't get rich writing that book, but I took all my money and I invested in Apple, Amazon, Facebook, and Google, and that went up by a factor of 10. And I'm ashamed to say that wasn't hard, right? Of all the things I've done in my life, to be in business, you have to do 100,000 things a year well. And I've been doing that for 30 years. And so millions and millions of things done well to get the company where it is. But investing in Apple, Amazon, Facebook, and Google was pretty straightforward. And so I was in a good situation, and everything was working personally. And because it was working personally, I was oblivious to the currency and the monetary challenges in Europe and the US because they were small. Like you're expanding the M2 monetary supply by 5.5%. Yep. It's not enough to, it's not boiling you to death in a hurry. It's slowly boiling you. And so while these, Google and Amazon and Facebook are growing 20-25%, they're beating the hurdle rate.
Yeah.
The hurdle rate you have to beat is the cost of capital, is the expansion of the M2 money supply. And so they're beating it. That's working. There's a nuisance. I'm not really paying attention. What happened was 2020, when everything came to a grinding halt and the gravy train ends, like the bond train ends when interest rates get to zero. big tech becomes a crowded trade, and in like a matter of weeks, you realize that it's now, the P to E of Apple doubles, even though the revenue's flat, even though the earnings are flat. And when I was invested in something that everybody else disagreed with, when 99% of the world disagreed with it, I was confident that was going to work. And as long as there's a debate, like, I'm tweeting Apple's going to take over the world and everybody's disagreeing with me and they're telling me to buy HP and IBM, then I'm comfortable. When we got to 2020, everything flipped and everybody agreed, and 20-year-old Uber drivers were buying Apple and Amazon. And my niece, who was like in junior high, she's buying Apple stock when it's going up by a factor of 20. Yeah. And I'm like, okay, I have to get out now. This world has changed, right? And so what happened was I lost faith in the monetary currency and the monetary policy in Europe and the US this year. Yeah. And I lost faith in the big tech trade this year. And it's not hard, right? I mean, the M2 money supply expands by 24%. If the money supply is expanding by 2, 3, 4x what it was, at some point you notice. It's like, if I turn down the temperature by 3 degrees every year, you might not notice. But if I crank it down by 20 degrees or 25 degrees, you notice. So I would say my worldview inverted. And what I realized was, all the big tech companies were now monopolies, and they were at the end of a 10-year run. And they weren't going to be a good store of value. Bonds to store value have to yield more than the expansion of the monetary supply if they're risk-free, right? The risk-free interest rate is the M2 monetary supply expansion if you wish to acquire scarce assets in the future with your money. And otherwise, if you're concerned about wealth preservation, your inflation rate isn't 1 or 2%. It isn't the consumer inflation rate. It's the inflation rate of a basket of scarce assets that you desire. That basket looks like it's expanding or inflating at 15, 20%, and we can debate what it is. But when that happened, then I realized that bonds aren't going to hold value because their yield is not greater than that monetary supply expansion. Equities have to grow faster than the rate of monetary expansion. So maybe you can grow cash flow 6% a year. And if you're growing 20% a year, you're good. If you're growing 6% a year in the last decade, then you leverage up. So you borrow debt, you short the dollar, you buy back half your shares, and your 6% looks like 12% EPS. And then it starts to work. At the point that you can't leverage up anymore, and at the point that the hurdle rate triples, it becomes pretty clear that nearly all the bonds won't hold value. Most real estate's not going to hold value. And most equity isn't going to be a store of value either because the hurdle rate tripled. So now you have to run around looking for a scarce asset, a scarce desirable asset. And you can't buy a liquid portfolio of Picassos or Van Goghs, as far as I know, at a fair price. And in theory, liquid or scarce real estate, beachfront property that every other wealthy person wants, it might hold value, but how are you going to buy that in a liquid portfolio at a fair price? And so it leads you to look at precious metals. And the problem with precious metals is, you can create derivatives, and so you can print more financially, and then you can also mine more. And then it's very difficult to verify how much there is. And so they're not a hard precious asset in the way that a crypto might be. So that leads you to crypto. And after you sort through 6,500 cryptos, the conclusion is Bitcoin is the dominant crypto asset network. And it's 50 times bigger than the next thing that looks like it. And so my conclusion became Bitcoin is the monetary network, like Facebook was the social network, except the monetary network's worth 100 times as much as a social network. And if Facebook's worth $1 trillion, I'm the guy that bought 500,000 shares of Facebook at $12 a share before it went public. And then I bought another 400,000 shares at $38 a share. And then I watched it go to 280. So I understand Facebook, and Facebook was a phenomenon that was inconceivable before they created it. There wasn't any competitor to it. They collected and channeled social energy of 1 billion people, and then 2 billion people, and maybe 3 billion people now. And they monetized it with advertising, and it became a dominant juggernaut. Well, I look at Bitcoin and I think, what if you had Facebook for money? You know, what if it was Facebook for billionaires? What happens when 10 billionaires put $1 billion each on the Bitcoin network? What happens when thousands of millionaires put $1 million each on the Bitcoin network? And that's worth 100 times what Facebook was. And of course, what did I need to do? I needed to conclude that it was 50 times stronger than the next best thing, you know, and you can look at Bitcoin Cash and Bitcoin Satoshi Vision, and they're similar, but they're 50x smaller. And then I needed to work through the Ethereum thing. And my conclusion with Ethereum is it's not a treasury network, because they're going to convert from proof of work to proof of stake. And until they've run $100 billion on a proof of stake network for 5 years, you can't reasonably trust it with your treasury assets.
Lindy
it's
effect.
More like it's like a unicorn.
Yeah.
Right? It's something, but it's not a treasury reserve network if you want to store a value. Once I got past that and I saw Bitcoin was 200 billion, it's game over, right? But by the way, and the last icing on the cake is 99% of the world disagreeing with me.
Exactly. Contrarian investor. That's what I'm doing. What I also recommend in my books, in my consulting. You always have to bet against the mainstream, against the big mass. You know, do always invest contrarian. If the whole world thinks Bitcoin is it, then sell your Bitcoin. But there's one question I have, Michael, because you made a lot of money with domains, yeah, with web domains. So you already understood back in the days the scarcity of digital assets. So why didn't made it click in your head when you learned about Bitcoin in 2010 or 12?
It's because if you're making, your brain has got this much bandwidth, and there's a lot of smart people in the world, right? The world's full of people that don't understand Bitcoin, but they're smart, right? They're not stupid. They're ignorant, right? They're uninformed, and they don't understand it, and they haven't taken the time to understand it. So I don't think I was stupid. I was smart enough to start a company, smart enough to buy up hope.com and angel.com and alarm.com and voice.com and strategy and the like. And I was smart enough to make $500 million investing in FANG stocks. But if all those things are working, and if you're preoccupied by running your business and everything's working, and if you're, by the way, and you're Apple was a pretty good idea in 2012. You could have bought Amazon at $300 a share, 2013, 2012. It was going to go up by a factor of 10. I was already in love with something else, right?
Okay.
Apple was going to go up by a factor of 20. Yeah. Amazon was going to go up by a factor of 15 or 20. Google and Twitter and Facebook, these were all going to go up by a factor of 20. I had my thing, and then Bitcoin was a nuisance. It was a noise. By the way, Bitcoin was at a different stage too, right? The risk reward is different. There are 100x as much risk, and there was a 10,000x as much return, right? If you had bought it, in 2013, you would have gotten a monster return, but you had to get through the fork wars. You had to get through the Mt. Gox, failure. You had to get through the question of, will the IRS legitimize it? Will the SEC legitimize it? Will the OCC legitimize it? Will Congress legitimize it? Will the Senate legitimize it? Will institutional investors legitimize it? Will the cowboy exchanges with 125x leverage blow it up? And these are all challenges to Bitcoin that it overcame between 2012 and 2020. So my view is buying it at 10,000 was a lot less risky and a lot more obvious than buying it in 2012. But maybe more to the point, I had a motive in 2020, right? I had a problem to solve. And one problem personally was the big tech trade was crowded. right? Nobody thinks that Apple and Amazon would go up by a factor of 10 or 20 from here, right? And the corporate problem was I had 500 million in cash, and it was looking like it was going to lose 15% of its purchasing power a year. And so I'm going to lose 50 to 75% of the cash value, right? And the outside shareholders didn't appreciate the cash. They literally told me, we don't give you any value for the cash. So I had a corporate problem. I had a melting ice cube liability. Personally, I became disenchanted, with the world. And the world turned upside down. So now I had to reassess all my premises, and I had to open my mind. And that led me to the Bitcoin standard. And that led me to macroeconomics. And that led me to a hard assessment of the impact of monetary expansion everywhere in the world on the value of assets. And that led me to conclude that inflation is not 0%. Inflation is a vector. And the inflation rate of a market basket of scarce assets is running 15, 20%, not 1%. And if your goal is to invest so that you can purchase streaming YouTube and Netflix videos, it's not that hard. But if your goal is to invest to buy precious things that people want, i.e. wealth preservation, you're going to have to change your strategy. And so that's how I came to discover Bitcoin.
Yeah. So how did your board react, or your investors or shareholders react when you told them you want to buy Bitcoin?
Well, that's a complicated question. There's lots of different constituencies. For us to buy Bitcoin, first I had to come to the conclusion.
Yeah.
Then I had to educate my officers of the company, my general counsel, my CFO, the president.
That was hard.
Then I needed to educate the board. Then we needed to educate the auditors. Then we needed to educate the outside counsel, the outside lawyers. Okay, each of those was unpeeling the onion, and it was very methodic, step by step. And it was a combination of, I sent them homework. I sent them 3 hours of videos. I sent them, it's the stuff on YouTube. I've got it posted on my website. If you go to hope.com, HOPE, you'll find some of the resources that I sent to the board. It was
Andreas Antonopoulos.
Andreas's lectures, the debates with Peter Schiff and Eric Voorhees, Lynn Alden's papers, the bullish case for Bitcoin by VJ, the Bitcoin standard, all sorts of things.
Yeah.
Parker's work. So I get them that. Then I met with them one-on-one. I answered their questions. Then we met as a group. Then we divided and everybody did their own projects. The general counsel had to work through the regulatory issues. The CFO had to work through the finance issues. Then I worked through the issue of how do we now communicate this to the shareholders? And that's a totally different issue. If you're a private company and you're the only shareholder, that's one thing. If you're private and you had 5 shareholders, you would have had a set of meetings, but we're public. I can't meet with all the public shareholders. So that's a very interesting thing we did. And here's how it went. If I could have done what I wanted, I would have bought $500 million worth of Bitcoin, overnight. And I would have put out a press release saying, we bought 500 million worth of Bitcoin. That would have been a shock to the market. Okay. And my experience in business, and I've been a public company CEO for 22 years. Like we came public in 98. I'm actually the longest lasting public company CEO of an enterprise software company.
Congratulations.
I've been around a while.
Wow. Respect.
Okay. And what have I learned? I've learned don't surprise people, right? Nobody likes to be surprised. Yeah. So here's what really happened. First, we decided we're going to allocate $250 million worth of our capital to buy our own stock back. Then we allocated $250 million to evaluate alternative investment assets. Then we put out that announcement as an SEC filing. So we telegraphed to everybody in the marketplace that we were going to actually consider investing a portion of our treasury into scarce assets as an inflation hedge. And the other portion we were going to use to buy the stock back. We let that sink in. A week later, we accelerated it. We put out an announcement that we were tendering for $250 million worth of stock immediately at a premium. The stock was 120 or so, and we tendered it at 122 to 140 in a reverse Dutch auction. So that meant that any shareholder could tender it up to 140. And it was a lot of money, 250 million in capital. So we were ready to buy a lot of shares of the company. I think about 25% of the company at that point. And we also announced that we had gone through our evaluation and we had bought $250 million worth of Bitcoin. Okay, we let the market digest that. Now, ordinarily, if we put that announcement out and you're a shareholder, you have minutes to decide whether to buy or sell the stock. It's very anxiety inducing. Like, was that a good decision? Was that a bad decision? Do I buy it? Do I sell it? Do I wait? That's a lot of anxiety. But because we paired the strategic announcement to acquire the Bitcoin with the tender offer, we actually gave everybody a 20-day period to decide whether to tender their shares at a premium. So the worst case is you're going to sell your shares back to us at $140 a share, and the stock was 122 before we did this. So what you have is maybe you want to buy the stock because you like the idea of a company buying Bitcoin. Maybe you want to sell the stock because you hate the idea. Maybe you don't understand and you're going to study the idea. Maybe you'll wait for other people to make the decision for you, and then you'll just go with the flow, and you get 20 days to think about it. So at the end of the 20 days, the stock traded up into the mid 130s, and it traded above the tender offer. It traded into 140s and the low 150s. And so some people got a chance to sell out above the tender. Other people waited and they sold into the tender, and $60 million worth of stock got tendered at 140 a share.
Okay.
But we had 175 million left. So then we put out another SEC filing saying, we've modified our treasury policy, and now Bitcoin is the treasury reserve asset of the company, and we expect that we may buy more than 250 million worth of Bitcoin. All through this time period, I communicated nothing. I was in a silent period because, do I want people to do the tender? Do I not want them not to do the tender? Like, there's no, I let people make their own decisions, right? It's best that way. So we let that sit, and then we bought 175 million worth of Bitcoin. Then we had a $425 million worth of Bitcoin. The market thought about that. The stock traded to 145, 150, 160. And then the market just traded, and it traded up, and it traded up, and it traded up. And, today it's in the mid 200s.
Yeah. And
you can see it, the answer is a complicated answer. It's a multi-step answer because you have to be respectful of the counterparties, and their interests. And you have to share with them full transparency about your intent and the risks in a methodic way. So we knew what we wanted to do, but you can't just do it overnight without jarring people. And our goal was to make it a model of shareholder communication. And Mark, the last point is we wanted to rotate the shareholder base. So you see, we did it in such a way that every day during the tender period, people that liked the idea were buying, people that hated the idea were selling. And then at the tender, everybody that hated the idea was selling, and people that liked the idea were not selling. And then afterwards, right, then people that are liking the idea are buying. And what I wanted is I wanted a shareholder base that was aligned with the business strategy of the company. I respect the fact that you could have a different opinion. It's not my job to come up with a strategy that is not objectionable to anybody ever. It's my job to come up with a business strategy to maximize the shareholder value and the interest of the customers, the employees, the stakeholders, the vendors, secure the future of the company, and do it in a mature, transparent, respectful, methodic, thoughtful fashion. And so that's what we were doing. And we were aware that we needed to be thoughtful about it. And so that's how we did this. And it's a long-winded answer, but but to be shorter about it would not do it justice.
No, just fine. Perfect. So how was the reaction from the SEC, for example? Did they say like something like, are you crazy? Are you out of your mind? Bitcoin, the funny money from the internet? Or did they just say, oh, that's a good idea. Actually, it's a perfect inflation hedge. There are only 21 million coins one day and it's limited by math. So how was their reaction?
We have not had any communication
They just
with
approved
the SEC on this.
Okay.
The important thing for us was simply to get the filings proper.
All right.
And we had to go through the process of making sure that it wouldn't convert us into an investment company, an investment firm, which would have required that we make a different filing. And so there's a certain set of ways in which you would make the investment so that you're compliant with your existing charter and all the existing regulations. And so that was a lot of the legal groundwork to do this.
Yeah. So you invested $425 million of your cash reserve from MicroStrategy. The news hit the Bitcoin scene very hard and immediately people went crazy. You are already a legend, yeah, because it's very important for the mass adoption of Bitcoin that big companies stepped in. You were the first one, and I think one day the Bitcoin community will build statues for you or something, yeah. But however, it was big news, and it still is. So you started with 250 million, then you added another 175 million, so 425 in all. So this investment is now worth $735 million. So you are up $310 million already. You made, I guess, more money than with your core business, actually.
Oh, and by the way, you didn't know, I bought $175 million worth of it personally in June at $9,882 a Bitcoin. And so
didn't know that.
At this point, you know, either I or the company owns substantially more than $1 billion worth of Bitcoin.
Wow, respect. Yeah. Very impressive.
And that, for the record, was fully disclosed to the company before they made any of their decisions. So it's very important as well. But I thought it was important to disclose that because Bitcoin is transitioning from the narrative of it's a risky, highly leveraged thing and you should only invest what you don't want to lose, to a different view. It's, in my opinion, it's a synthetic, long duration, safe haven asset, ideal for a treasury. And you ought to invest in Bitcoin what you don't want to lose, right? It's a different thing. Like, why would I want to invest 95% of my money in stuff that's debasing at 10 to 15% a year with currency printing, and only have 5% in the stuff that's accreting at 100% a year, right? And so we didn't just buy Bitcoin, right? The message was, we're adopting it as a treasury reserve standard, and we intend to sweep our excess cash flows, all of them that we don't need as working capital, into Bitcoin because it's a safe haven asset. And in fact, it's the hardest, strongest safe haven asset that we can find in the world. It would be irrational to leave excess monetary energy in something other than Bitcoin. And I wanted people to understand that, because I think a lot of people, they've kind of been ashamed, or they've been just shamed to disclose their Bitcoin commitment or their ownership, or they were thinking they get criticized for it one way or the other. And we need to do the work to legitimize the asset class. And there's a clear story here, which is people that want to preserve their wealth or preserve their monetary energy ought to buy it, right? And companies that want to preserve their treasury and protect their balance sheet ought to buy it, right? And so that's what we've been doing. That's what I'm doing. I think there's 50 million people that don't really need to be telling people what their personal finances are. But if you want every publicly traded company to understand that there's an alternative to losing 10 or 15% of your purchasing power every year in your treasury, and if you want to actually reverse what I see as the moral hazard of companies taking on excessive debt and decapitalizing themselves in order to stay ahead of the hurdle rate, and driving themselves toward ruin and insolvency. We need to send a message that you don't have to borrow $1 billion, buy your stock back in order to keep up with the rate of monetary expansion. You can buy $1 billion in Bitcoin and keep up with the rate of monetary expansion and keep a treasury that's worth billions. And it's a much healthier strategy to protect your treasury than to decapitalize the company by leveraging up the balance sheet. And most companies, you can look at them in the stock market, their response to monetary expansion is they short the dollar, borrow money, buy their stock back. And the problem is it's driving them all toward ruin and insolvency. And so I thought it's an important message for corporations, public and private. I also thought it was important to address head on the fears and the anxieties of the original Bitcoin community and the crypto community. They have all these tropes. They're like, well, it's risky, it's volatile, it might go to zero. And they're still living in the 2012 or the 2015 or the 2017 timeframe. And what I want to say to them is LeBron James played basketball from age 9 to age 18, and he was talented but erratic and volatile. But then he grew up, and from age 18 to 28, he destroyed everybody and everything in his way. And he was still LeBron James. There's a point at which you mature and your youthful volatility is a history. It's a story from your youth. And Bitcoin is growing up. And just because you remember there was a time when you had an 80% drawdown doesn't mean you should gleefully forecast and expect the same thing going forward. It's a new world. It's a monetary network. It's getting stronger, faster, harder, smarter, more dominant every single day. And it's very clear to me, I wanted people to understand it's not a speculation, it's not a hedge, it's not a gamble. It's not a summer romance. I married the thing. Right? And you should too. You should marry it. It's the best, most beautiful thing in your life. This is the monetary network. It's worth 100 times what Facebook is worth. You have the opportunity to own a piece of it while 99% of the world doesn't understand it. They all need it. It's the solution to a $250 trillion problem of wealth preservation. When they finally wake up, they're going to stampede to it. You're going to wish that you had arrived before them. That's the message. If you believe that message, tell the world.
Yeah. The next title of your book should be called Orange Wave by Michael Saylor. So, Michael, I love your passion because I have the same passion for Bitcoin. I think it's the biggest revolution in the last 100 or 200 years, and it can change everything. It's democratic, is fair, is transparent, is borderless. I just think Bitcoin will surprise all of us, definitely all of us, and it's a real pleasure listen to you because you're full of passion for Bitcoin. I love it. So the thing is, the most people, like you said, most people who are even intelligent, they don't get it. And if people get it, then they love Bitcoin. You can't understand it and then say it's not good, it's not working, because it's the soundest money we ever had, and after the next halving it will be the soundest thing we will ever see. I guess it will be incredible, more stable, more sound than gold, for example, like the stock to flow model. So the question is, people are scared about that Bitcoin will be banned. A lot of people in Germany, for example, they are scared that Bitcoin will fail and die, or it will be banned. So what advice do you have for the German audience, for example, so they're not scared of Bitcoin anymore?
Bitcoin is a monetary network. And every single time a person joins the network and they put their monetary energy into it, then it gets stronger and it absorbs not just their monetary energy. The monetary energy drives the price up. but it also absorbs their spiritual energy, their political energy, their marketing energy. And so Bitcoin in the last 12 months, what did it get? It got an advocate, Paul Tudor Jones, followed by an advocate, Bill Miller, followed by an advocate, Stanley Druckenmiller, followed by an advocate, Carlos Salinas Palacio, who's one of the richest men in Mexico, who owns newspapers, who owns banks, followed by another advocate, right? It's had Jack Dorsey, who runs Twitter. Jack Dorsey's got one word bio in his Twitter. It's Bitcoin. That's what it says. Bitcoin is the only hashtag on Twitter with its own icon. Why do you think that is? You know, Jack Dorsey runs Square. Square is worth $90 billion. It got the advocate, it got PayPal as an advocate. They're worth $250 billion. The CEO of PayPal owns Bitcoin. It got me as an advocate. I run a publicly traded company. That meant that I flipped all of my lawyers and began to communicate to all my accountants, and they started to hear it. You got to imagine everybody that I touch. It got another advocate, you know, in Stone Ridge when Ross Stevens came out, right? It's one after the other. And then we have, in rapid succession last week, the head of the SEC, Jay Clayton, when he was going out, got on television and said, Bitcoin's here to stay. It's not a security. It's a property. It's sufficiently decentralized. That was a massive endorsement. That was him saying, we're not going to regulate it as a security. We have the IRS that's given it property tax treatment. There's a checkbox on the IRS form, but that's legitimizing. No one asked you to check whether you broke the law, right? It's being embraced by the IRS, embraced by the SEC. The head of the OCC, Brian Brooks, said it's okay for banks to custody it, embraced by the bank regulators. Then it was embraced by, you know, we've got an SEC commissioner that's an advocate. And then Cynthia Lummis got elected senator.
Wyoming.
Okay. You know how powerful one senator can be in a Senate that's split 50-50? Think about it. One senator topples the balance of power between the Democratic and the Republican Party for the next 6 years. Amazing. So, and she said her mission is to educate Congress on Bitcoin. There's a congressional caucus. There are Bitcoin advocates in the major media. You can sense them. I watched one television interview the other day, and I counted 11 tells that told me that the producer and the interviewer were pro-Bitcoin and probably owned it. Okay. Rick Reeder got on television, and he's responsible for $7 trillion at BlackRock, and he said Bitcoin is here to stay.
Yeah,
and it's better than.
Yeah.
Okay, and they asked him, do you have it in your funds? He said, well, I don't have it in my BlackRock funds. And if you listen very hard,
subtext,
you heard something different. So Bitcoin is a network juggernaut, and it's got powerful people in powerful places. It's too late to stop it because every single person recruits 10 more people just like them.
Yeah.
And it's spreading.
Did other CEOs already reach out to you and ask you for advice?
I am getting contacted by people that have $1 billion plus pools of capital, CEOs of company, multi-billion dollar investor funds, multi-billion dollar hedge funds, multi-billion dollar whatever, and that's very interesting. I mean, I must have talked face to face with 100 or more.
Yeah.
But here's the more important thing, Mark. I put out one video where I explain this on Real Vision. It's got 200,000 people have seen it. And I put out another video to 150,000. The other day I did an interview with Anthony Scaramucci on the SALT network, and we dropped it on Sunday morning, and it had been seen by 18,000 people or something in 3 days.
Yeah.
So there are a lot of people watching these videos, hearing this story. I'm not even meeting them, right? It's like someone watches something on YouTube, shares it with someone else, tweets about it to someone else, it goes viral. And how long would it take you to actually have a meeting every hour, 40 hours a week for the rest of your life to get to 180,000 people?
This
You
interview
can't
will
do it.
explode as well. Hundreds of thousands of people will see it. I know that it will go viral because it's just amazing. It's the first time you're on a German channel, like you already mentioned, and the information is so important, and we will spread it everywhere. So, is MicroStrategy planning on buying more Bitcoin?
Yes.
How much?
It's
How
our
many?
it's our treasury reserve asset.
Yeah.
And so we generally will do business in fiat currency in about 27 countries where we operate.
Yeah.
We'll sweep our excess cash into into the treasury, and and then depending on our financial policies, we'll either buy our stock back or we'll buy Bitcoin with it,
Yeah.
and we'll do that subject to market conditions, and we're always balancing that.
Okay.
So that's the way we think about it. It's kind of the treasury reserve asset for anything that we want to hold for long periods of time.
So, at what point or what price target would you sell Bitcoin?
Well, I think the most important point is there's nothing you could buy that would be a better store of value than Bitcoin at any price I can conceive of right now.
Okay.
So for example, I think that there's $100 trillion of monetary energy in bonds and stocks and real estate that's going to be debased 10 to 15% a year. If the M2 monetary supply in Europe and the US expands by 10 to 15% for the next 5 years,
yeah,
then it's not just going to, it's not going to debase the value of the currency. It's going to debase the value of every fiat instrument that collects cash flows in the currency. If that's the case, then that means stocks have to actually grow faster than the rate of money expansion. So you can't buy a stock. Most won't. You can't buy a bond. They're not going to yield more than the rate of monetary expansion.
Yes.
You can't buy real estate. The rents aren't going to accrete faster than the monetary expansion. So I have to find a scarce asset that's scarcer and better than Bitcoin. And between you and me, I already went through 6,500 cryptos, gold, silver, every piece of art, every piece of real estate, everything liquid I could find. I don't think there is one. And the market doesn't think there is one. Bitcoin's going up. It's accreting 100% a year on average every year for the last decade. So no one's found a better store of value. And I don't think, I don't see anything on the horizon. So as a rational person, I have to say that if new facts presented themselves and there was some new development, then I would evaluate it and I would act accordingly. But right now, I think that it's reasonable that Bitcoin is going to demonetize gold. It's better. It's harder.
11 trillion now.
Yeah. So, and if it demonetizes gold, it's going to go up to $1 million, a coin or whatever that number is. And it's probably going to demonetize sovereign debt that's negative yielding. Wouldn't you? Like, who in the world is holding $17 trillion worth of debt that you have to pay money to hold?
Pension funds?
Right. I mean, and so I think it's going to demonetize equities, bonds, precious metals that as a store of value. Like, you should own gold because it's pretty. You should own real estate because you need it. You should own stock because you believe that their cash flows are going to grow faster than the rate of monetary expansion. Buy Zoom with 10 million users because it's going to 1 billion users, right? You can buy, you make a venture investment. You can make an equity investment if you think it's going to grow faster than the rate at which the central banks are going to expand the broad money supply. So there is no price discovery right now in 95% of these assets. People aren't owning bonds because they're going to yield more than the monetary expansion, right? They're not owning stocks because they think they're going to go faster than the monetary expansion. 95% of them won't. Everybody knows they won't. They're just stampeding into those things as a quasi-scarce asset, as a store of value, because the consequences are worse if they sit in cash.
Yeah, true.
And people are stampeding. The ones that are buying gold, they're buying it because it's the only non-fiat instrument that they know that's liquid that they can buy. When the real terrifying danger of owning gold and Bitcoin at the same time is as soon as people understand that Bitcoin is pharmaceutical grade gold with all of the benefits and none of the side effects, and when they look at the chart and they realize that Bitcoin is up 160% and gold is up 30% or something, and Bitcoin is outperforming gold every year for the past decade, and then when they understand it's pharmaceutical grade gold plus big tech. It's all the benefits of big tech if you bought big tech a decade ago, and all the benefits of gold without the impurities and the mining and the hypothecation and the corruption that comes with gold. Once they get that, then they're going to realize that you allocate half your portfolio to gold and half to Bitcoin, you're going to lose the gold. And then it's a double whammy. The gold is going south and the Bitcoin is going north, and you've lost the opportunity of investing the capital in the Bitcoin. So it's just an awful situation. This is why, say Paul Tudor Jones believes in Bitcoin, but his fund is up 6%. Bitcoin's up 160%. Don't you think at some point you would think that if I had put half of it into Bitcoin, I'd be up 80% instead of 6%? Being up 6%, by the way, is losing if the money supply is expanding 24%.
Yeah.
Right? And so an under allocation to Bitcoin is losing. And it's a terrifying observation. Like when I thought about gold, I thought, yeah, I kind of like the idea. And I thought, oh my God, everybody that wants a scarce asset is going to look at gold and bounce over it to Bitcoin once they realize that this thing is better. And not only is gold not going to work, it's going to demonetize. And so it's hideous problem. I think that most people don't understand it yet. And we're 1%, right? 99% of the world doesn't get it. So Bitcoin, I'll make one last point. It's a monetary network, which means that when it's worth 100,000 a coin, it's 10 times better than 10,000 a coin. When it's 1 million a coin, it's 100 times better. When it's 10 million a coin, it's 1,000 times better. It's not a fiat instrument. Therefore, it is not valued as the sum of the discounted cash flows over time. There's no P to E. It's not going to delaminate from the P to E. When Apple stock is valued at 1,000 times earnings, your fiduciary obligation as the CEO is to do an acquisition with the stock or go raise money with the stock because the stock is overvalued. And that's what's going to happen. With Bitcoin, when Bitcoin is up by a factor of 100, you can't make any more. And there's no CEO to issue anymore to change and there's no one can change the rule. And the thing only exists to be a pool of liquid monetary energy. And every single time the monetary energy liquidity goes up, it becomes a solution to a new class of investors. So right now, the obvious investors are people with $5 billion in their hedge fund that want to put $500 million into Bitcoin, and they're the buyers. And next it'll be private companies with $5 billion and $10 billion in revenue with 300, 400, 500 million in treasury. And then it becomes small, mid-sized public companies, 500 million, $1 billion. Then it becomes mid-sized public companies. Then it becomes large public companies that want to put 100 billion. Apple's got $200 billion. And they're going to lose $30 billion of that in purchasing power in the next 12 months. Yeah. So they're going to lose $100 billion in the next 5 years if they don't move it into something. Bitcoin, but moving 100 billion into Bitcoin for Apple Computer is daunting right now, but it won't be daunting when it's 5 trillion in liquidity.
Yeah.
Then you get to small countries, mid-sized countries, and large countries. And when you get to large, and I left out insurance companies and endowments and pension funds. So I think what you're going to see is it's a monetary network that there's no reason why it can't be $100 trillion in the monetary network. And that's, what is that? 300 times more than it is right now.
Yeah.
So when am I going to start selling it? Well, sell it for what?
Fiat.
Right.
No.
The point is, sell it for what?
Yeah.
What,
exactly.
I've told people, if you own Bitcoin, the only thing that I respect you for is if you sell it to get married, buy a yacht, buy a jet, or buy a villa of your dreams.
Yeah.
buy an asset of passion.
Yeah.
That's acceptable. If you're just buying a financial investment, where are you going to find a financial investment where you could expect it could appreciate by 100% a year every year for another decade? Where are you going to find that, right? Where are you going to find an investment that isn't a fiat instrument, right? The truth is, by the way, the only thing you can find that's not a fiat instrument is probably another smaller crypto, which is 50 times smaller with 50 times less security, with 100x more risk. Otherwise, what are you going to do? Tokenize all the Picassos in the world and buy that? I mean, maybe you can securitize something scarce, but it's show me something. But here's the last point: once a network crosses $100 billion, it becomes a dominant, mature network.
Yeah.
So when you're buying these things, the rule of thumb as a contrarian is not. It's not buy something that 99% of the people disagree with. It's buy something that's 99% likely to succeed that 99% of the people disagree with. And so how do you know that it's likely to succeed that 99% of the people disagree with? It's Facebook when it had vanquished Friendster and MySpace, and it was 20, 30 times bigger than them in 2012. At that point, it was 95% or more, 99% likely to be the dominant social network. It's Apple when it's 2012, 2013, or Google 2012, or Amazon 2012. They were all 95 to 99% likely to succeed, with 99% of the world underestimating their potential. That's the inflection point. If you'd gone earlier, you might have bought Ask Jeeves or Yahoo or AOL, and they didn't work, right? So there were you could have bought Nokia and BlackBerry instead of Apple, and they didn't work, right? You could have bought Friendster and MySpace, they didn't work. Yeah. So what you want is there is not an example of $100 billion network that got vanquished after it got to that critical mass. That's what you're looking for, $100 billion liquid, scarce, monetary energy network. Now, Mark, name the second one after Bitcoin. You tell me. What's the second best one? It's got to be $100 billion, and it's got to be a scarce, liquid store of monetary energy. Give me the second one.
This is hard. So you don't like gold, you don't like silver. Is there another coin?
You can again, gold miners are creating 2% more gold a year. If gold goes up to 20,000 an ounce, they're going to frack gold. Yes, you're going to set up a gold ETF, and you're going to hypothecate it and issue more gold securities than there is gold. And the banks control your gold, and you can't verify the gold every 10 minutes. Yeah. You can't even assay the gold. Gold is nowhere close to the purity and the veracity of Bitcoin. It's not even. Bitcoin's 1,000,000 times better than gold. That's the second best idea, though. By the way, that's the only second best idea. Exactly. It's like I say to people, it's like buying Bitcoin and gold in order to store your value is like buying Apple and Kodak to store your photos. I mean, it's like one of them was a good idea, and the other one is in shoe boxes in your attic, and the stock went down by 99%. And so I think gold's going to demonetize because people aren't going to say stupid forever, right? They're not going to say stupid and ignorant forever. It's all about the money, right? It's all about the money, and the money's going to go to the network that works. Yeah. And by the way, the only logical reason to own something else is you just think, well, there's a 1% chance Bitcoin goes to zero. Or if there's a 1 or a 5% chance Bitcoin goes to zero, like the unknown black swan, okay, then yeah, own something else in your portfolio, right?
Diversify, yes.
But if you have an investment portfolio that you're using to preserve your wealth, it's like I take some money, I buy my house, I have some gold buried, I have some whatever buried, I have food, I have antibiotics, I have a gun. These are all the things I have for after the zombie apocalypse.
Yeah.
I have that, and then I have some money to invest. And what am I going to buy? Bonds, commercial real estate, stocks, Bitcoin, some other crypto. Well, it's like Bitcoin is your treasury asset. Ethereum is your unicorn. Every other crypto is a venture capital flyer, 99% likely to not work, but you might get a gain if they do something which is compelling and it clicks. That's the way I would look at the entire market right now.
So do you own any other cryptocurrencies?
No.
Okay. You're not planning on buying?
My point of view is I don't want to engage in venture.
Okay.
I'm not do I want to bet on which of the 6,500 cryptos will be the decentralized finance yield coin? Not really. When it's $100 billion, what do I invest in, Mark? It's like, I buy Twitter when they own speech. I'll buy Facebook when they own social. I'll buy Google when they own search. I buy YouTube when they own video. I buy Apple when they own mobile. It's not that hard.
Yeah.
Buy the winner. I said this the other day on Twitter. I said, diversification is selling the winners to buy the losers.
Yeah, I saw that one. It was a good one. Yeah.
It's like buy the winner when everybody disagrees with you.
Yeah.
It's going to go up by a factor of 10. With Bitcoin, it may go up by a factor of 100. Might go up by a factor of 1,000.
Yeah.
It's definitely going up by a factor of 10. We can debate back and forth. When it's 10x tomorrow, we'll get in a debate over what happens next.
Yeah.
That'll be then. By the dominant network, Bitcoin is the first network in the history of the world that's engineered to host a synthetic safe haven long duration asset. It is a thermodynamically sound network for storing, channeling monetary energy over long periods of time with no power loss. That's what it is. People don't understand that. Even the people that own Bitcoin don't understand it, Mark. They don't understand that we've invented a thermodynamically sound monetary energy network. If they understood it, they would classify it like buying into Standard Oil in the year 1880, or buying General Electric, or buying aqueducts, or owning the entire air network, or the entire shipping network, or the entire railroad network. Yep. It is a monopoly on monetary energy, and it is so dominant and at this point, so much momentum that you can expect huge amounts to flow into it. And as it flows in, it self-monetizes. So if you look at that, you're like, well, where else am I going to put my money? In my lifetime, I made a lot of money on Apple, Amazon, Facebook, Google. I bought OpenTable. I bought eBay. I bought PayPal. I bought Twitter. I made money on them all, right? And this is the best idea I've seen in my entire life.
Wow, yeah.
Right? I mean, is it more valuable to host all of Rupert Murdoch's money or to host all of Rupert Murdoch's photos? Right? How about, would you like everything Rupert Murdoch's going to buy on eBay over the course of his life, or would you just like his savings? It takes you 30 years to buy everything you're ever going to buy on eBay. Yeah. It only takes 30 days to put everything you're ever going to save on Bitcoin.
Yeah.
You see, so it's a front-loaded, self-monetizing network, and one billionaire does the work of 10 million middle-class people. So all you've got to do is, and by the way, one corporation does the work of 10 billionaires. Yeah. So you've got to set a catalyst. 99.9% of the people haven't joined yet.
Yeah, we're very early, still very early. That's what I was telling my customers, my clients every day, what I tweet. We're still very early in the whole process. Bitcoin is a young teenager, matured a little bit, but the best is yet to come. So,
but you can't name me a second best. You can't name me a competitor. That's the point. It's very early. It's the solution to everybody's problem. They don't know it, but it's already an unstoppable fire in cyberspace. It's blazing.
My next book will be about Bitcoin, because I think it's the biggest revolution in mankind, like I already mentioned, and everybody has to know about it. We have to educate the people. That's why I was so eager to invite you, so the German audience who doesn't know you will know you now and know that you have all the passion for Bitcoin, which I have as well, because I learned about Bitcoin in 2013, and when I read the white paper from Satoshi Nakamoto, I couldn't sleep, and I woke up and I told my wife, listen, the first thing I do tomorrow morning, I buy Bitcoin, and since then I'm crazy because I always looked for an alternative after my experience in Argentina for a sound monetary system, for something better. And of course, there was the gold-backed currencies back in the days, it worked. I like gold, actually. I like gold, and gold made 30% this year. This is better than many other things, but still, Bitcoin is the king in the house. So I think Bitcoin will surprise everybody, and the media, the people, the smart guys in the room, they still don't know it. They didn't get it so far, and if they get it, they will buy it. So what do you think? Do you think Apple, for example, or Google will buy Bitcoin in 2021?
Maybe.
This would be a game changer.
I think that over the next 5 years, I think they will. Will they do it over the next 12 months?
Countries? You think countries will invest their reserve or switch from gold to Bitcoin?
Yeah, I think it's a stack, a pyramid, right? Like the small countries first, the private companies first, the mid-sized companies, right? And as every single time one domino falls, the door is open for someone else to take an aggressive position. Look, Mark, you're a visionary. Everybody got into Bitcoin back in the last decade was a visionary. You read the white paper. You could see the future. What's the knock on it? Well, there's two things. Is it going to get copied? Is it going to get banned? Exactly. Let's say that I was a visionary and I agree with you, but I had $1 billion at risk. And I said, yeah, that's a good white paper. It's a good idea, but will it get banned and will it get copied? And the truth is it got copied 6,500 times.
Yeah, exactly.
And so the difference between today and then is today I can look you in the face and say, yes, it's a brilliant idea. It's not going to get copied. It's not going to get banned. And 300 billion people, $300 billion worth of money agrees it's a good idea. That's the difference. It was a good idea then, but the risk was 100x, and you're getting paid for it. You get paid for that risk return. Today, you don't get paid that much. You still have a big future in front of you, but the real question is, will it be copied? Will it be banned? And once people understand it's not going to be copied, well, will it be copied? Will it be banned? Will it fail? Well, it hasn't failed. People try to copy and that didn't work, and it hasn't been banned. It's not going to be banned. Once those three things, you're past them. Now I can put 100 million on the network. Yeah. Now I can put $1 billion on the network. Right now, you got regulatory issues, disclosure issues, precedent issues. We're knocking them down, right? That's why the people in 2020 are really critical. Like every single person that makes a stand this year is exponentially more critical, because if I'm laying the blueprint for a publicly traded company to buy this stuff, then people can follow in my footsteps, right? Someone needs to do it this year. Yeah. Next year you'll see more, and the next year after that more. It's probably another 10-year run. It's like it's going to, Bitcoin is going to be driven by adoption. It's going to be driven by technology. It's going to be driven by asset inflation. Those three things in the near term over the next decade. And they're big drivers. They're like 15% each a year drivers, right? Because when PayPal adopts or when PayPal integrates, you know what that's doing. When Apple Pay and Google Pay plug into Bitcoin, that's going to be massive. So that adoption, the tech integration drives adoption. When billionaires and billion-dollar investors and billion companies, when they adopt it and put money into it, that's another massive driver. And then as the central banks,
of course, they print
and monetary supply, that's a massive driver. Yeah. In Argentina, right? They set it on fire, right? So those three drivers will go for a decade. After that, as Bitcoin matures, then you'll see the fourth driver will be economic productivity of the cyber economy that has embraced Bitcoin as the Treasury Reserve standard. So people that have adopted the Bitcoin standard to save their wages, their earnings, their cash flows. If they generate cash flows and they sweep them into Bitcoin, then of course the value of the ecosystem will grow because the currency is deflationary. So if the Bitcoin economy grows by 3%, Bitcoin will go up by 3%, right? That's the classic Austrian economics interpretation of deflationary money, right? Fixed money, 21 million coins, and you divide everything in the economy that has adopted Bitcoin by 21 million, and that's the value of a Bitcoin. And so that's a second order driver, because the first order drivers are going to be adoption, technology, inflation. And it's what I say on another one of my interviews to Keith from Hedgeye. He said, I got this model, the quad 4 model, and it's like deflation and inflation does this and Bitcoin will do that. And I said, Keith, all these models work when you have a fixed pool of capital and a bunch of people that are like-minded, that use the same models, that trade with each other on the same metrics, the same way, and they go around in circles. But the system is not a closed system with limited capital, with people that think the same way. What happens when 10 billionaires all say, I bought it, I'm going to buy more, I'm not ashamed of it? And when 10 billionaires come and they put $1 billion each, all your models are destroyed. They don't work anymore.
He didn't get it. He sold them. He sold all of them. Since Keith sold his Bitcoin, it went up 80 or 90%.
What I see is there's a lot of people in the finance world, Mark, that they don't reason from fundamental first principles, like an engineer.
Yeah.
They reason from metaphysical models that are, they're like, well, like people go, well, Bitcoin has traditionally had a certain volatility, and it's like, well, the past is not the future. It's like, well, LeBron James at age 13 had a temper tantrum on the court, and he's played 100 games. So that means 1 out of 100 games, he's going to have a temper tantrum on the court. Well, no, he's not. He was 13. When he's 25, he's not going to act like when he was 13. So looking backwards at a statistical model of an immature asset class and extrapolating forward isn't rational.
Yeah.
If you want, it's like I'm an engineer. You hand me a bulldozer and you ask me how much dirt I can move over the next week. And then there's a finance guy that says, well, I know in high school you only moved like small shovelfuls every day. And so I think you can probably move like 13 shovelfuls because that's what you do on a daily basis. I'm like, I'm an adult and I'm driving a bulldozer, you idiot. It's a bulldozer. I'm not a kid with a shovel in the playground anymore. So why are you applying other models to the future? It's because you're not thinking from fundamental first principles.
True.
Here's the first principle. There's $250 trillion of money that needs a home. Bitcoin has 300 billion in it, or 350 billion in it. There's no other option. How much of the 250 trillion is going to move into Bitcoin, and at what rate? It's going to be a function of inflation, adoption, which is education, and technology when they integrate it. And so just ask those 3 questions and stop going back to your model based upon history when none of these things were true. The inflation, if you'd asked me, would I buy Bitcoin in February, I would have said, what is Bitcoin?
Yeah, it's incredible how you definitely matured in the Bitcoin space, and your knowledge is really, really impressive, because I'm in Bitcoin since 2013, but you're definitely better than me now into the whole topic. So respect, definitely. You really did a deep dive in the rabbit hole. So, and everybody loves it. You're already, like I mentioned, you're already a legend, and it's an honor to have you on the show. And I saw it on Twitter. I asked the people, hey, do you have any questions for Michael? And I received like 300 questions or something. So Marco, for example, asked, are you into Bitcoin for the money or the revolution? But I think you already answered this question, because you're full of passion for Bitcoin and you believe into Satoshi Nakamoto's white paper.
I think it's the critical engineering invention of the decade, maybe of the century, maybe. I would say Bitcoin is the singularity where engineering crashes into economics for the first time in human history. I'm an engineer, and every engineering system, a pneumatic system, hydraulic system, closed adiabatic system, they don't have leaks in them. You can't make any engineering system work with a leak.
Yeah.
Okay. An airplane will blow up, a ship will sink, right? A nuclear reactor will melt down, a steel refinery will blow up. So engineers create systems that work. Every single finance instrument in the world today has a leak in it. All the fiat instruments have leaks. All the currencies have leaks in them. Bitcoin's the first example of something we've got that's sitting on a closed thermodynamic system. It doesn't have a leak. It's an economic system that works. So as a scientist and engineer, I'm passionate. If you look at the progress of the human race, humanity was driven forward by great engineering advances. Like Standard Oil created an energy network that channeled chemical energy that made energy 1,000 times cheaper. And we wouldn't have most of the modern era without Standard Oil and without the idea of channeling chemical energy. Bitcoin is channeling monetary energy. The future of the human race depends on it. So as an intellectual, I think it's critical for the human race. As a humanitarian, I buy into Jack Dorsey's argument. There's 1 billion people, and for them, it's an instrument of economic empowerment. And I think there's 7.5 billion people. It's a savings account in cyberspace for 7.5 billion people that have been deprived of a savings account. And in fact, the political system has deprived everybody of a savings account. Your savings account went from 5% yield to 0. And then they're debasing the currency so that if you have the currency, you're going to lose 10 or 15 or 20 or 80% of that. So it's a critical thing to establish. It's the savings and loan at the end of the universe. And it's useful to 7.5 billion people. It might be life or death for some of them. For others, it's just a way for them to not lose their money. And then finally, there's $250 trillion worth of money invested in the stock market, in the bond market, in real estate. It's all debasing at the rate of monetary expansion, which is 10-15%. So if I calculate the real yield by using the asset inflation rate, everything's got a negative real yield that I can see. And so it's a good financial idea and it's a good investment idea. So call me triple passionate. It's good for the human race.
Yeah.
It's good for the future of humanity and civilization. And it's a good way to not lose your money or to make a lot of money. And they're all coming together at the same time. And it's a moral, ethical advance because it introduces engineering discipline and natural law into politics and economics.
Wow, we couldn't end this interview better. It was an amazing ride. I thank you so much for your insight, for your input, for your passion. I think everybody who watches this is just now a big Michael Saylor fan. You definitely have to follow him on Twitter. Every day he tweets about Bitcoin, and it was a great honor and a pleasure to talk to you, Michael. I hope we do it soon again.
Thanks, Mark. I really enjoyed it. Thanks for listening.
Definitely. I could talk for hours with you.